this video, we'll look at practice quiz 5A. So let's get started with question 1. Question 1 scenario. Primo Limited currently applies overheads using a plant-wide rate and is now considering switching to departmental rates. Until now, labor hours were used exclusively to apply overheads. So it should be noted that until now, the company has been using plant-wide rate, and the cost driver for the plant-wide rate is labor hours, okay? Until now, labor hours were used exclusively to apply overheads. However, now they are considering using labor hours in the assembly department and machine hours in the cutting department. So everything is then summarized in the table here. The budget figure for this year and this financial year are provided in the table. So you will see that if we split between the plant into a cutting department and assembly department, these are the information over labor hours and machine hours. But if we look at the totality, these are the hours for plant wide. So so we should note that not every number in this table will be useful. The key is we've given this number, we'll pick and choose the right number that's applicable to the response to our question. So part A, calculate a plant-wide application weight to 2 decimal places using direct labor hours. We will look at the right-hand side of the screen right now, which is a set of notes I prepared for you. Now, you will see on the screen both the calculation breakdown of how we come up with the answer, but more importantly, you can see at the moment that I have a screen capture from your textbook. That's what I've been, telling you in class that, if you need to learn a certain concept, and the best way to go with it is to go to go to your digital textbook and then look into the paperback textbook and do a search function, and you'll be able to search the keywords and get the information you need. For this particular question, when we allocation of factory overhead, the formula is the total budgeted factory overhead over the budgeted level of activities, the cost driver. So in this case, our total budgeted overheads is $140,000, as you can see from my cursor here. Given that we are doing plant-wide rate at the moment, and the labor hours from the question is the key driver. So therefore, your applied rate will be $140,000 divided by 87,500 units, and the answer is 1.6. Next, calculate the application rate on 2 decimal places. Again, be careful whether it's 2 decimal places or 4 decimal places, and make sure you answer the a correct answer with as per the requirement. Calculate applicable rates to 2 the decimal places for each department where overheads are covered using machine hours for the cutting department, and direct labor hours in assembly department. Now, first let's look at cutting department that use machine hours. Cutting department, so let's look at the cutting department. The information is shown here. Okay, in your cutting department, your overhead cost is $60,000, and what is your driver? Your driver for cutting department is machine hours. Okay, so what you need to do is to look at your overhead cost for cutting power and then divide it by the machine hours, and that is $4 per machine hours. Okay, next let's look at the assembly department. For the assembly department, let's look at the assembly department here. So the total overhead is $80,000, and the question here is given to you that the direct labor hour is the cost driver for the assembly department, right? And therefore, what you would do is we'll divide $80,000 by 80,000 direct labor hours, which to the right hand side you will see on the screen is $1 per direct labor hours. Okay. If you want to understand more about predetermined rate, you can go to your textbook, chapter 5.6 to understand better. Okay. So next. So for part C, the factory foreman prepared to a quote for job A22 based on cost estimates of $3,700. A breakdown of the estimated cost is given in the below. After the job was completed, the record shows the following costs of and hours have been incurred on the job. So what this is showing to you is these are the actual costs involved, right? Because it's after the job was completed, the record shows the actual cost, and therefore you will see that these costs are the actual cost, and this is the actual direct machine hour incurred, right? So now, what would the job have cost in total if a plant-wide applicable rate was used? Plant-wide applicable rate, what was that? We've already calculated that in our part A, right? If you still remember, part A, we've calculated that, and the plant-wide applicable rate is 1.6. Okay, so therefore, if you look at the calculation here, what we'll first do is 1.6 dollar applicable rate times, given if it's plant-wide rate use, it is the cost driver is direct labor hours, and so therefore we're going to use $1.6 applicable rate times our direct labor hour, which is our cost driver. In this case, that's 60 hours, where you can find it from here. Okay, the actual hours incurred is 60 hours, and therefore the answer is $96. Okay, that's step one. Step number two, we need to add back our actual cost. As I mentioned just now, the actual cost incurred after the job was completed, coincidentally same as what you've quoted, right? So the actual cost is $1,600 plus $300 plus $1,500, and that's equals to $3,400. And therefore, the total cost, if a plant-wide applicable rate was adopted, would be $96 plus $3,400 and equals to $3,496. Now, what would it, and the next question is, what would the cost have, the job have cost in total if the departmental applicable rate is used? Okay, so departmental applicable rates, meaning that the usage of the separate cutting department rate and the assembly rate that we've calculated in question 1B. Okay, how should we do that? Again, the first one is using by per each department. Let's calculate the actual overhead incurred. Cutting department, as we mentioned before, machine hours will be used for cutting department, and therefore what we'll use is our cutting department applicable rate that previously calculated, which is $4, plus the machine hour, as you can see from the right hand side here, is 100 machine hours, and therefore the applicable rate for cutting department would be $400. Cutting department with 100 machine hours, okay? And next, let's look at the assembly department where the labor cost is the driver. Assembly department, we've calculated that $1 applicable rate to be used, and also the driver is labor hours for assembly department, and in the assembly department the labor hours is 50 hours. So therefore your calculation will be $1 times 50 hours and equals to $50. We then have to, don't forget, we have to have step 2. Step 2 is to add back this actual amount incurred, and therefore add back the $3,400 and our total cost would be $3,850, which equals to the summation of $400, $50, and $3,400. Okay, then let's look at question 2. Question 2 asked, how would you decide on the appropriate cost driver? Now, I'll leave that to you to have a look at the slides yourself, but in particular, the cost driver is generally the activity that drives the cost pattern, the cost behavior. As shown in the screen here, it says that the activity that causes overhead to be incurred is called the cost driver. So how do you define the cost driver? Is to find which activity led to a cost increase. Okay. In the above example, the production cost driver causing total cost to increase. The cost production level is the cost driver, so quantity is the cost driver. The cost driver is the basis for the allocation of overheads, right? So therefore, in the previous question, we have cost drivers such as the direct labor hours and machine labor hours, which will be given in the question to you. Okay, so please have a look at the slides yourself, and then please look at the slides yourself, and then think about what could be the right answer, right response to the question. Now, question 2. Now, question 2B, describe possible implication of overhead application that is over applied. C is under applied. Okay, so basically we need to understand the concept of over application and under application. So I have then captured the screen from the textbook to explain to you what is over applied. Over applied means that you've applied overhead that is more than the actual cost incurred. Under apply is your applied overhead is less than your cost incurred. Okay, so how would that affect your budget? Right, that's the question. How would that affect your company performance? Not just budget. Sorry, that the implication of such. So I would suggest you to think about from a budget point of view, from a pricing point of view, from a cash flow point of view. For example, if you over apply, that means your expected cost is higher than your actual cost, meaning that in that case you might have set a higher selling price. If you set a higher selling price, that your budget will have a higher cost, a lower revenue. You will have underestimated your revenue, and therefore you probably overestimated your selling price as well. That may affect your sales performance. It may also affect your cash flow, because at the end of the day, because when you over apply, that means you actually have more cash on hand, but because we haven't budgeted for it, we probably don't know what to do with the cash, and therefore we're missing investment opportunities as well. So along the line of how it will affect budget, how it will affect pricing and cash flow, and provide your answers of no less than 80 words. So next, let's look at question 3. Question 3 to me is really rearranging the information to rearranging the information to present it. We accountants, right? So we're given the scenario information and we present it in a way that is easy for people to understand. Okay, that's pretty much what we're doing, right? So in this scenario, Crystal Foxes Limited employs 15 workers whose normal hours are 38 hours per week. Is paid at a rate of $45 per unit. Annual leave, including leave loading, of 17.5% for 5 weeks. And then we also know that sick leave is 10 weeks, Public holidays is 10 weeks. Long service leave is accrued for 1 week per annum. Employer superannuation, excluding leave loading, is 9.5%. And what we're required to do is to complete the table below to calculate the hourly charge rate for the Crystal Fox. So basically, how much does it need to charge to cover all the expenses that they need, right? Do not use $ or comma in your answer. Okay, just remember we do the right thing. Okay, so let's get started. So we all know that pay weeks in Australia is 52 weeks per year. So your pay week is 52 weeks per year. Your annual leave loading of 75% is given to you here as 5 weeks. So this 5 week will attract an annual leave loading of 75%. Okay. And you will see actually what I've given you here in your notes is the calculation for each of this number. So I'm just going to go through the calculation for each of this number with you. And that's largely relevant to the charge out rate. But I want you to be able to, just refer back to the notes and understand how we come with the number. If there's any question, please come back to me, right? We will have a chat. Okay, so come back to here. So if you look at long service leave, it was given to you. That's 1 week a year. Public holidays 10 days, sick leave 10 days, and both of them are 2 weeks. So therefore, take away the long chargeable weeks you have, which is a total of 10 weeks. You have 42 chargeable weeks, and all our charge rate have to be determined by using the chargeable weeks as a basis. Okay, so therefore your hourly rate, hourly pay rate is $45, which you need to pay the staff. On top of that, what cost did we incur? We incur annual leave payment. That is $45 times 5 weeks over 42, and the 5 weeks comes from the annual leave here. Okay, so you go through all the corresponding equation for all these. They literally are similar, which is all shown in here, right? That's based on our result here and a denominator of 42 weeks, okay? Now, annual leave loading, on the other hand, is based on your annual leave balance. So annual leave balance of $5.35.3571, and for here, therefore, the 17.5 loading has to be loading has to be calculated on the $5.3571, and it's $0.9372. Superannuation, on the other hand, would then be based on this subtotal, and then you will have to pay actually this one, excluding the annual leave loading, based on this one, and times a 9.5%, and that will give you 5.2929. And so your total charge rate will be the summation of these three, and it will be $61.9446. Next, let's look at question 4. So question 4 looks at the journal largely relevant to payroll again, and this time it's recorded against factory overhead control. And we've sort of looked at this questions. This is part of the example question that we looked at in class as well. So let's look at the scenario. Airbrain products charges labor to work in process and overhead at a rate of $50 per hour. So the hourly rate is $50 per hour. Now, labor-related costs such as workers' compensation, superannuation, sick leave, and long service leave, annual leave and public holiday. I'm reading the question here, okay? Annual leave and public holidays entitlements are accrued as overhead cost, where overtime relates to a wash job. Now, this is important. It actually mentioned here, and this is something that when you read the question, you should really look at. Where overtime relates to rush job request by customer, the premium is charged to the job. Otherwise, it is charged to overhead. Okay, so if the job is a rush job and you incur overhead, it will goes to work in process because it's charged to the job. Otherwise, it goes into overhead. Overtime is paid at a time and a half, and this is a hidden information that you will need to know as well. Overtime is paid at 1.5. There are no wage accruals. Journal narratives are not required. It's actually given to you. So instead of not required, you actually need to look at the journal answers that's given to you and put in the numbers for the journals. There are 15 factories employees who work 40 hours per week. All parts of the question are related. Timesheet recorded in the following information. Direct labor hours have 2,000 hours. Indirect labor hours have 6,000 hours. And then your total overtime is 100 hours. And within that 100 hours, 60 hours is relevant to the regular job, and 40 hours is relevant to the rush job, and therefore the 40 hours will go straight to WIP, because it's clearly said in the question where the overtime relates to the job, a rush job, it will be charged to the job directly. Okay, so and we are given all these payroll information as well. So for you to note that all these number of payrolls of the labor related costs in the question at the moment is given to you per annum. So when you calculate, everything has to make sense. Then you have to compare apple to apple, and so the numbers here will need to be divided by 12 to get to be used in the formula, and you will see that shortly. But you will need to then in the actual quiz 85, you will need to look at the numbers and see whether it's per annum or monthly. If it's monthly, then you don't have to divide those number by 12. Now, the following are the labor related costs for all employees of the month. So there are further information that's given to you. Okay. Airbrain products makes an employer contribute of 9.5% of the gross wages to the industry super fund. So the superannuation of 9%, excluding all other leave costs and overtime. Complete the journals related to the payroll. Company policy and procedures. Debits must be entered before credits. Okay, so in the exam, make sure you enter debit first. Where there is more than one debit or credit in the entry, it should be followed alphabetical order. Okay, so here, if you can see, is annual leave go first, and then long service leave, public holidays, and sick leave. Okay, no space should be left empty. So where the amount is not required, it should enter 0. So it's quite tricky. I guess it's I have to say it's the eLearn system limitation. So you need to write 0 on the spaces that you don't put anything in. So with the journals here, and it should be, because we don't need this journal, we will put all the zeros in here as well. So let's have a look at the information here. Now, firstly, looking at the job, we want to record our labor control against our factory overhead control and our work in progress. Okay, we were given that each the pay rate for the staff is $50 per hour, and they've worked 60 hours in direct overhead, right? So 600 hours, right? Plus also they've worked 100-hour overtime. However, as we noted that only 60 hours of the overhead is regular jobs, and 40 hours is directly to the job, which is work in progress. And therefore here, it will be $50 times 1.5 times 60 hours only. And your answer is $34,500. Now for work in progress, obviously, you would then have the component of $50 times 1.5 times 40, which is the rush job. You will also have a direct labor of 2,000 hours times $50 per hours. Okay, so your answer will be $103,000. Okay, and then your control will be the summation of the two debit number. Okay, and remember to put all the zeros in the question so that you can actually get some mark. Okay, so this journal is to record the allocation of labor to the product cost. Now the next journal is going to record the accrual of all the labor related costs. You know, all those annual leave, long service leave, public holidays, and sick leave, right? So let's calculate that one by one. So we know that provision, so the total factory overhead will be a summation of the labor cost, okay? Overhead control, that is the temporary account. And provision is given to you, that is $120,000 per annum. So you have to divide it by 12 plus $21,000 divided by 12. That's the annual leave loading. And so therefore you will follow the equation here, and then the answer and the number should be 11750. Okay, long service leave is $30,000 per annum, and divided by 12 is $2,500. Similarly for public holiday and sick leave, and the calculation is done by here, and each of these is $5,000. Okay, so therefore from here you will know that the total factory overhead for this particular journal is $24,250. Okay, next, now we need to reverse our labor control. Okay, our labor control, we know that is $137,000, $500 from our first journal. So therefore, we'll put in a debit to clear the account of $137,500, right? Now, what we are given is a medical fund. The medical fund actually is all this number here. The reason that we put medical fund is because it's alphabetical order, right? So medical fund is $4,000, followed by PAYG, which is $25, and then should be followed by superannuation, which is $500. The reason we and then that's not close to the $137,500 of the labor control, because we actually have payroll to pay. So therefore we do payroll clearing account, which is the actual payroll that we, the wages and salary that we make, which is $103.500. And you will see that I have put in a answer here for your reference. Okay, I'll break down here for your reference, and therefore this is to record the distribution of the employee wages to various payees and clearing account. And on the time when you pay your clearing, so that's your wages and salary account, a payroll clearing, you would then make sure that we go back to just directly translate the number from here into here. Okay, so that is your wages and salary account, and therefore payroll clearing of $103,500, and credit it from the cashier bank. Okay, so that's our question 4. And that is all of our practice quiz 5A. If there's any questions, please reach out to your teacher.